What's going on, everyone? Today we're talking about these very highly anticipated earnings by Zoom Video Communications Incorporated, or Zoom as we call them. The video conferencing platform that has obviously skyrocketed since the outbreak of the Ronies. We're talking year to date, a stock that's up 200%. Now, after hours, this thing is down 1.96, but it was up 1.93 in the regular trading session. So early on after hours, it was actually trading very high. Still was up an additional 5% from where it was to begin with. So we're going to look at this. We're going to talk about CrowdStrike after this in a separate video, but let's talk about Zoom for now and see if my estimates were somewhere near right. Well, honestly, though, Zoom did a good job there. So on a non-GAAP EPS basis, they beat by 10 cents. GAAP EPS of 9 cents beat by 8 cents. I was expecting something from 0 to 5 cents. So all things considered, I am pretty impressed with that. That's a good GAAP beat. I predicted something a little bit less than that, so I'm very excited by that profitability. Now, the number that really should shock you here is the revenue line of $328 million, which is a 169% increase year over year. That is incredible. That's incredible. Beat by 124.64 million. Now, obviously, we anticipated a massive beat. At least I did for sure. I think anyone in the nation predicted it as well. Now, something this big, I didn't necessarily expect this large of numbers for them to post, so I'm pretty impressed with it. I think they did a good job. And here you go. Customers with more than 10 employees grew 354% to 265,000. So businesses are using this program, which is where it's really pretty nice. And again, that's really the point of Zoom. We obviously use Zoom as well, and my current field as well. We use Zoom for our video conferences. It's just how it is. It's a very good platform. So here off the brief look here, Zoom is up after hours following. Now it's not, but and upbeat guidance for the current quarter, very well above consensus. Revenue grew 169%. Operating income rose to 54 million versus 8 million a year ago. So I anticipated something a lot lower than this 54 million number. So it was pretty exciting. Net income of 58.3 versus 8.9. Again, very excited with that number. In operating metric, it reported that 769. They really like that number. Customers contributed more than 100,000 in trailing 12-month revenue, up around 90% year over year. And a trailing 12-month net dollar expense rate in customers with more than 10 employees rose over 130% for 8 straight quarters so far. Pretty nice. For quarter two, it's guiding a revenue of 495 to 500 million. Holy crap! Consensus was 224 million, so they're expecting more than double that. That's incredible. And you think about it, it makes a lot of sense, right? I think they're going to have a bigger impact this quarter than last quarter as far as that's concerned, as they're getting more customers involved. So very excited for that. EPS of 44 cents versus to 46 cents versus a consensus of 11. That is massive. Obviously, that's a non-GAAP basis, so take that with a grain of salt. So you're talking GAAP. They might post a potentially, if all things are accurate, around a 20-cent mark, if they're still doing the same type of non-GAAP EPS reporting. For the full year, it's forecasting revenue of 1.77 billion to 1.8 billion, and assumes an increased churn due to high percentage of customer buyers buying monthly subscriptions. So they're expecting these people to keep their memberships above the consensus of 939 million, way above the consensus, and an EPS of $1.21 to $1.29, above the consensus of 44 cents. So obviously the question becomes, why is it on? It is obviously pretty nice. They're doing a webinar via Zoom. Of course, that's how they do their conference call. Because why wouldn't they? Going on right now, actually, as we speak. Pretty exciting for that. I'll be listening in on a replay of it. But pretty exciting. Why is the stock down? I think it's a good question. We'll look into the specific numbers, but I think part of it too is just this incredible run up. And again, I talk about a stock up 200% year to date. I mean, if you look at this chart, there is no impact of Rona at all. The Rona has not had any impact on the stock. It dipped barely, just barely, and it's since just shot up. And I think it's cooling off just a little bit, The webinar's going on right now, so obviously that has had an impact on this stock, no doubt. You could tell it's going down just a little bit more. So I'm curious to see what they're saying, but I'll be reading or really looking into that conference call here pretty shortly. So a number of that. We saw those numbers. So here from the CEO, obviously, we are humbled by accelerated adoption of the Zoom platform around the globe in Q1. The crisis has driven higher demand for distributed face-to-face interactions, collaborating using Zoom. Use cases have grown rapidly, and I think that's a very valid case. When you talk about the use for Zoom, obviously there's the overall benefit when you talk about just the closures in general. A lot of companies that used to have boardroom meetings were not allowed to anymore, right? They're just completely not allowed to, and still probably aren't. Most major corporations won't allow it, so they have to use something like Zoom. Zoom video conference, that's how they're going to have their meetings. And obviously beyond that, we talk about major corporations using them for sure. Churches, absolutely. And this will be customers over 10, technically, if you consider customers. That's what they'll consider it as. But so churches, businesses, we talk about just virtual video conferencing. Not only that, but just the vocal aspect of it. It's massive. I mean, this platform is massive for the current situation. And long term, I think it absolutely will be. This is honestly the future of business. It's future business. Board meetings are going to be done via conference call as opposed to in person. That's just kind of how things are going. That's how the world's going right now, and it's how it's going to continue going. So I'm excited to see that trend and what it does. And obviously you're going to see a slowdown. You won't see 100% plus increases every freaking quarter for Zoom. It'll slow down a little bit, but I think this whole year, or at least these first 2 quarters, is going to be very massive growth. I think you're going to see good 100% plus year-over-year growth, even for the quarters after that, because of the recurring revenue that they're going to get because of this. Because a lot of these people aren't going to go back. Once they start this process, they're not going back into the Stone Age. They're not. So one really good thing for Zoom, and I think that's why the stock's so overbought right now. And I say overbought because, frankly, it is overbought. Anything that's touting a PE ratio of near 3,000 is a little bit overbought. Now that forward PE ratio is going down, obviously, as we talk about an increase in the estimates that they're giving, which the estimates they're giving are pretty massive. So if that's the case, it'll just really poke people to buy the stock even more. Let's see, what else do we have going on here that we want to talk about? Cash equivalents, we will look at that because I'm excited about that. Net cash flow was $259 for the quarter, $259 million. Compared to $22 million in the first quarter, so they had a $259 million just profit for them. That's pretty exciting, all things considered. So yes, everything's expanded. Obviously, we know this. So 769, we love it. Trailing 12-month net dollar expansion rate, we saw that already. We saw this outlook. That's really all that they're giving in as far as this press release is concerned. So let's look. I'd like to look at their balance sheet, and we'll talk about the stock a little bit. Thankfully, really not thankfully, they're giving me a quarter-over-quarter comparison here. But I must say, you can see the impact of that EPS line. So cash and cash equivalents on this company of $488 million versus $280 million in last quarter. That alone was just added from this quarter. Total assets in general of $1.8 billion versus $1.09 billion, or $1.1 billion if you want to round up, because why not? Total assets as a whole of $2 billion versus $1.2 billion last quarter. Massive growth in assets, there's no doubt. So the question becomes, does liability go up as well? Because that happens sometimes. They'll leverage debt to add to their balance sheet. So one thing I want to say is, yes, it went up massively, right? So previously, their total current liabilities number of 333 million has increased to $1 billion in total current liabilities. Yikers, that is a massive increase in that liability. A lot of it is because of this deferred revenue line and accrued expenses. And obviously, as I mentioned, expenses will go skyrocketing because of this, right? Accounts payable, not bad on the company at all. Total liabilities in general of 1.1 billion versus 455 million of last quarter. They more than doubled their total overall liabilities. Still a shareholder equity of a little bit less than $1 billion, when previously it actually was less. It was 833 million before, so 900 million versus 833 million. So it did increase. I just don't like to see them taking on really that amount of liability, and especially it all being short term. Kind of sucks, and it's not like they don't have the cash to pay it off, right? I'm glad that it's not obviously loaded with long-term debt. I don't like that. I don't like company with a lot of long-term debt for the most part. It's not a bad balance sheet, all things considered. I don't know where the value stands for this company, though. I do want to mention that if we talk about stocks to buy here, I don't know where the value lies in this company anymore. Just due to the fact that it has taken off to just an unrealistic degree. We're talking from their lows of 227, and we're talking year to date of 200%, right? This is a 5-month period where they've shot up 200% in a time in which the whole market is really lagging right around, frankly, close to break even now, which is insane to think about. I don't know if the value's there right now for Zoom, and it's trading so strange. I just can't give a good justification on it. It's obviously down even more after hours as investors are kind of weighing in the value of this stock, I believe. Now, it's a really good company long term. I think they have a lot of success ahead of them, but don't know about it. Oh, hey, look at that. I hit a thing. Hit a key accidentally. But yeah, I'm not buying into the stock, but if you do, I'm not going to be upset with you, but I just think the valuation's not quite there right now.